Hi everyone, let's go over my bullish and bearish Elliott wave scenarios on Bitcoin, starting with the first scenario where we're looking for a leading diagonal in a wave A three-wave corrective structure to the upside in a wave B, and another impulsive structure to the downside in a wave C, moving below the low of wave A. In a leading diagonal, your invalidation is currently 62.2k. This is the 1-to-1 trend-based fib extension taken from the high to the low of wave 3 to the high of wave 4. Wave 5 is not allowed to be longer as wave 3, which means 62.2k should not be hit in this particular scenario. So far, price is grinding to the downside with a lot of overlap, which is what we like to see in a diagonal, and also the volume is now moving towards the downside as price is making new lows, which is also something we like to see in a diagonal structure. To the downside, we also have interesting support, the blue box here between 62.6k and 63.1k. We did hit at least some support, which is the high of a daily gap at 64.6k, but arguably the support below is a bit stronger. In this scenario, we are then looking for a move towards the upside in a wave B. The common target for your wave B is between the 886 and the 382 Fibonacci, taken from the start to the current low that we have of the diagonal, giving you a target between 67k and 71k. Inside this area, there are two main resistance boxes. The blue one here, 66.6k to 67.1k, and the one above, 69.1k to 69.7k. At the 886, which is very high for wave B, we have another one, 70.8k to 71k. After B, we then look for an impulse down in wave C. A similar scenario locally, but a different count in general, is a flat structure. So here we have a flat in a 3-wave A, 3-wave B, but now this move to the downside is labeled as a wave C. It is an ending diagonal structure. An ending diagonal has to consist of 3-wave structures in every wave. So wave 1, 2, 3, 4 and wave 5 all have to be a 3-wave corrective zigzag family structures to the downside in this case. The invalidation is exactly the same, 62.2k, and also here we're looking for price to then move towards the upside either directly or one more low and move to the upside. Now the difference between this scenario and the zigzag scenario is that in a wave B we want to count a corrective structure to the upside, as wave B has to be a corrective move, while after a flat in a wave A, B, C, if this is a correction and we look for continuation to the upside after this flat, we want to count impulsive structures to the upside, 1, 2, 3, 4, 5, looking for the highs. Locally, we have some resistance though before we actually hit the first resistance box, and that is the 4-hour gap. It's just good to know about 65.8k to 66.1k. If we then zoom in to the 15-minute time frame, then you can see that price at the moment is trapped between the two value areas of the previous ranges. We had a range over here and price hit the point of control for a very nice rejection and a move towards the downside, touching the value area high of this range over here, with the point of control still untouched at 64.4k. If price can flip the point of control at 65.6k into support, also passing the value area high here, and close some 1-hour candles inside that 4-hour gap, it increases the probabilities for already a move towards the upside, at least touching the resistance here at around 66.6k to 67.1k, if not continue to higher prices. Looking at the CVD divergences, we have a bullish CVD divergence on the chart, but just like previous ranges, as price has been falling from 72k, we have bearish CVD divergence with every bounce towards the upside so far, and this is something that you can see on a 5-minute time frame. So we have a higher low on price, lower low on yellow as well as blue, so there is a bullish CVD divergence, but you'll also be able to spot the bearish CVD divergence. Here we had a lower high on price but a higher high on the CVD. Also over here we have a lower high on price but a higher high on blue. Once again a bearish CVD, and even here lower high on price, higher high on yellow, and then once again we had it over here as well, a lower high on price, but look at yellow moving up as we get red candles, which means that in the red candle there's more buyers than sellers, but it is still closing red. So there's absorption going on of market long positions with limit short orders. And what we want to see if we want to increase probabilities for price to move up already is to avoid having bearish CVD divergences with every bounce that we have to the upside, and instead create a grinding range towards the upside and create some consistent bullish CVD divergences, which would then support the bigger bullish CVD divergence as well. So if we then look at the probabilities of the different scenarios, then at the moment on the 4-hour chart, we are looking for a bounce to the upside, either directly or one more low. However, locally, the probabilities only really start to change for the bulls if some of these steps happen. First of all, we want to invalidate and avoid constant bearish CVDs with every local bounce and start grinding to the upside with consistent bullish CVD divergences. Also, we want to flip that point of control at 65.6k and close 1-hour candles inside the 4-hour gap. I hope that this video was helpful or valuable to you. Please check out the brand new complete Elliott Wave Guide playlist I've made that shows you all you need to know about Elliott Waves. Thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.